Good morning, good morning, good morning. Today is Tuesday, March 24th, and economic data is about to pop out here. If you're new to the channel, subscribe to the channel. Hit that bell for future notifications on videos that I make. Hit that thumbs up button and like this video. So the numbers that are coming out right now are some revised numbers. I don't think that those are going to impact things too much. At 8:45 after the market opens, you have some flash manufacturing PMI numbers. So be aware 15 minutes after the market opens, there are some numbers coming out. And then at 9 o'clock, 10 o'clock actually Eastern time, you're going to have Richmond Manufacturing Index that could do a little something to the market as well. That's going to be it for today. As far as Wednesday, docket looks pretty clean on Wednesday. Thursday, unemployment claims, 7:30. Friday, looks like consumer sentiment revised. I don't pay much attention to this because I think this is swayed politically one way or the other. But anyways, so not much on the docket this week as far as economic data is concerned. Just pay attention to the news, everything that's happening out in Iran. That's what's moving the market, and whatever Trump tweets seems to be the headlines as far as moving things. So let's get into things right now. Let's go and look at the VIX, what we've been focusing on. VIX is kind of elevated right now from where it started. It started pulling back yesterday. You saw that big 6 o'clock in the morning yesterday. The news coming out about Iran, 5-day pause. So we're still not out of the woodworks by any means. I said that yesterday. You can see the VIX is, stair-stepping higher right now. So you got to keep an eye on that. This is a gap. This orange rectangle that we have here is a gap down that we had a couple weeks ago. So, we came right up here in pre-market. So it seems to be respecting this $27.23 level. If you get above that level, I think that things could get pretty elevated, and then you can move into this 28, 27 level. I mean, we did spike up previous, overnight over the weekend up to that 3104 level. So you got to be careful that we don't creep up into that level though. But if we did creep up into that level and equities would pull back, I would say that we're getting closer to equities possibly bottoming out, but I don't think we're there yet. I think there's still a lot of stuff that needs to be done in Iran right now. I think the big chatter out there right now is nobody's has any confidence that our administration is talking to the right people. There's some conflicting stories out there, but if anybody follows Iran through the years, they know that that's pretty common when you're dealing with Iran. Anyways, let's get over to the ES. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Go down to the Discord or go down to the description and join our Discord community for live trading, as well as comments that we, I answer any comments below that people have as well. Also, if you want to drop a comment in here, if you want me to cover anything other than what I typically cover every day, you could say, if you've been coming to these pre-market analysis every day, it's rinse and repeat. I pretty much cover the broader markets. I started adding the SPY and the Qs, and then I go over Tesla, and then I go over Tesla options and what I'm going to be trading for the day, as well as a brief summary of the 5-minute opening range trade. But I'd be glad to cover some other things. Just drop a note down in the comment box, and I'll be glad to take a look at it for you. I will not cover any penny stocks though, so only companies that are solvent and making some money right now. So let's take a look at the ES right now. So big close yesterday on the ES. We closed below the 200-day moving average. 200-day moving average is always a big line in the sand for everything. You want to be above that to be comfortable for the long. So I would say today, not being comfortable taking any longs until you're over that 66.56.34 level. You could see we're below the close yesterday, so downside looks like it's it's apparent right now on the markets. So you have to be prepared for that. Something happened on my charts, so I lost a lot of levels here. Well, let me just see if I can get them up in here. see if they're on here. So I got some claims there. Yeah, my charts got deleted. So I got some temporary levels up here. So your first level down here, 65.8621. You'll need to support that. But below that, you're going to see here, this is a huge speed zone from yesterday morning. If you lose that, you're going to come down this first level here, 65.48. Below that, 64.8163, which is the pre-market low from yesterday. And below that, you have the 64.2825 level. Below that level, I think that there's, trying to, let's see if we can fan out here a little bit. And if we go, let's go 180, we do 180, there's 360 there. So below this, below that 64.28 level, I would say your next level that you're looking at there, 64.28. I would say your next level that you could possibly be looking at would be, I usually like going to this is a pretty good level right there. I like looking at that. So you could see how I draw my levels. I like looking where the high is and where it rejected. And then you could see you break through it, it comes down, still tries to support it, breaks through it. Now you can see there's your support right there. There's more support. So to me, that tells me that's a pretty good level there. So that's 60. If you lose that 64.2825 level, 63.73 is probably your next line in the sand there. And then if you lose that line in the sand there, your next level is probably going to be down here at 63.42. I don't think that that's going to get there today, so I can I'll be able to redo my charts before then. As far as the upside is concerned, like I said, with what we're looking at this morning here, you're going to need to reclaim the 66.50, 66.55, call it. If you reclaim that, then you can push into this high from yesterday pre-market, 67.48, and then you can push into the 20-day moving average, 67.62, 64. And if you do reclaim that, if you do get some crazy news today, you push into the 100-day and the 50-day moving average, sitting up there at 68.58, 57. So that's pretty much it on the ES. Let's get down here to the SPY. The SPY is going to look very similar. So again, we're below the 200-day moving average on the SPY, 660.60, 660.66. That's a nice little tongue twister. You're going to need to get above that again to get up and hit that point of control here. And I believe that point of control, I'm going to call that filled because you see how that filled from the 18th. So I'm going to call that filled, but you can just see once I mark it filled, it acts as a resistance level now because it was beneath the market, right? So when these point of controls, they're kind of like gap downs, like I was saying yesterday. Gap downs, comes back up, fills it, and now it holds as a resistance levels for us, right? You have this high here from August of 2025 sitting at 649.48. If we come down there, you hope that you're going to hold that for support. If you lose that, I don't see much down here until definitely the low from pre-market yesterday, and then coming down into this July 2025 high at 639.85. I like moving my 25s on the left side there, so we'll do that. And then below that, you have September of 2025 monthly low at 634.92. Again, I move my 25s over on the left side. And then below that, you've got 619.29. So I'm not sure if we get down to these levels today, but just put them on your charts, have them up there. Don't take them off. I leave them up there, and I see how they respond. If these levels, if these levels blow, if the markets blow through certain levels that I have, then I'll take them off my charts and readjust them. But a lot of times I just leave them up there because they seem to respond well to them. And so while if I was trading these futures or the SPY, the Qs or the NASDAQ, I would leave them up there because I would know how to be trading them during the day trade, right? So let's get over the NASDAQ. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Go down into the description and find the link for Discord so you can come for live trading from 9:30 a.m. to 11 a.m. Eastern time. In there, we go over trading Tesla options, and I answer any questions that anybody has. I'll flip back and forth. I'll go over to the broader markets. I'll go to the Qs. I'll go to the SPYs if anybody asks me to. So same thing. 200-day moving average line in the sand. It's going to be that way for every equity, every futures, all the broader markets. 24,518. Call it 60 for the NASDAQ. Must get over that in order to go long. Not thinking long while we're under the 200-day moving average. Currently below the VWAP, below yesterday's close, below the opening day trade from the market, pre-market open right now. So definitely getting some downside this morning. You have this high here from July of 2025, sitting at 24,041.75. You'd hope to get a little support right there, but you can see right here, like I said, when you get a speed zone is when you get a direction one way or the other. It then becomes a speed zone, right? Because there's no support there, right? There was no buyers and sellers in there either way. There was just a straight up move, buyers. And at some point, these buyers are like, oh boy, we're either getting out of our shorts and then getting a new position, or getting a new position. And now as the market starts to settle down and pull back, if they are new positions, there at some point, they're going to be like, oh boy, we're wrong. And we better start, covering our position. And then it pushes the market, back down to where it started, which hence creates a speed zone. If you lose this 24,041.75, you come down to this November 21st of last year, low of 23,904.5. Below that, you've got this monthly low of this month, actually, 23,768.27. Below that, I don't have much. I went back and I tried to find something. I don't have much support here until 23,371.5. So if we lose this monthly low in March here, we're going to have some significant downside. We could, I should say. It's all probabilities, right? And then below that, I've got a 23,112, which is a weekly high from July 7th of last year. And then below that, we've got 22,987.85, which is a September 1st monthly low, and also a June 25th monthly high. So this will probably be, if we did get that nasty sell-off and nasty fall-off, this would be a line in the sand support here that I would probably feel very comfortable with your risk reward on getting long here on the NASDAQ. So let's get over the Qs. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button and like this video. Let's get over the Qs. Same thing on the Qs, below the 200-day moving average, sitting up there. It's 593.12. Got to regain that 200-day. Can't do it. Yesterday, you could see we tried to do it, lost it. I would say at about 10:30, we lost the 200-day moving average. Once you lost it yesterday, you should not have been thinking longs at all for the rest of the day, even though it's kind of a choppy day for the most part. And we are still kind of chopping around in here. We did not give back the entire move just yet, but I would say if you lose this 583.32, I would say sayonara. I think it's all, going to get back to this entire move from yesterday. And I think you come down here at 580.74 is your first line of support. And if you lose that, then you got 574.63 for your next level. And you're definitely going to come and test the pre-market low from yesterday at 573.25. Below that, I don't have anything until 559.54. And then below that, 540.81 on the downside. On the upside, if you do regain the 200-day moving average at 593.12, you move into February's monthly low at 594.76, where you'd probably get some resistance as you did yesterday. You could see how it got up to that monthly low and just rejected it like a champ. So if you do pop up here again and you can regain it, then this is going to be a nice little support level. And then you can push back into this open point of control. We have it 600.92, and that also sits just below the 20-day moving average at 602.30. That should pretty much cover the downside and the upside for today. So let's get over to Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Tesla, had a nice little run yesterday. I said yesterday if Tesla popped up into this midline regressional trend line here, that we would get some resistance here. And I did try fading it a little bit, and then I was wrong and I got out immediately. And then you could see we popped up here and we came back down here and we supported it. So we're still holding this midline regressional trend line here. I have this from June of 2019. So, we're looking at about close to 6-year regressional trend line here. It's a midline here. So, however, that being said, that was yesterday. This is today. If we lose this, I think that you're going to come back down here. I've got this bottom, this is the bottom end of this flash wicks that we were getting yesterday morning. You can see right here, you know, I've been paying attention to these flash wicks we've been getting over the last few months, and it seems like the market comes and retraces itself. It's kind of like they're kind of act like gap downs a little bit, right? So I've been watching those, and so paying attention to that, those flash wicks. So I use that as kind of a level support. So if we did lose this, if we do lose this 377.72, I think you can come down to that 373.32 level for some support. And then if you lose that, I think you're going to come back down into the previous day close from Friday at 367.71. It also matches a high. What is that? It's a monthly high from May of 2025. So you're going to have to watch those levels as well. And then if you lose that level of right there, we've got this filled point of control here at 365.90. And then if you lose that 365.90, then you'll go to this lower end regressional trend line here that we have from the high all-time highs from December of 2025. And then if you lose that, then you start making your way down to these other levels that we have down here. And these are, I've got 3 weekly highs here. The first one is 355.87. The second is 348.98. And the third is 340.55. And if you lose all those, then you come and you fill this final point of control that we have open here at 333.78. Okay, so that would complete the open point of controls that we have open right now. Okay, so here's my open point of control chart. Okay, these are all the open controls that we have on the charts for right now. Okay, this one's filled. Here's an open one we have at 397 that was created from the 18th of from last week. Okay, so that's open right now. This one was filled last week, okay? And now we have this last one here called 334.07, all right, 333 to 334, that's open. Above that 397.89, we have a 355.12, and then we have a, 455.12 and a 478.39. So that's all positive. So if we can get past this, the geopolitical unrest that's happening over in Iran right now and put that to bed, and get some things back to normalcy, I think we can then make our way back to, back to these levels. Unfortunately, I think it's probably going to take that the war to stop, and then I think it's going to also take us to get past the midterms. So I think it could take some time for us to, start working our way back up. But the main thing is, just like with everything I was talking about, the broader markets and everything, you got to regain your 200-day moving averages before you get comfortable with the upside. Okay. Now that being said, does that mean I'm selling right now down here? It's possible. You can use different levels to sell. I buy and sell all day long. Even there's days if the market goes straight down. Surprisingly enough, if you looked at my P&L sometimes, and the market goes straight down, there's a lot of times I'm making most of my money on buying calls, and I'll go over that in a minute, right? So it's all about using your levels, right? So what I would utilize is, you could see here's the 200-day moving average up here. So just because I'm saying that I would not be comfortable taking longs until we're above it, doesn't mean you can't take a long into the 200-day moving average if you start regaining some of these levels that are above us, right? So that being said, let's get over into the options and what we're going to do for today. So I am going to, so for today, we're going to use tomorrow's expiration date, which is March 25th. I'm going to have the 385 calls on here. I may change that as the market opens up. I see we're starting to get a little downside here, but it's $5 away from where the market is open, right where the market would open right now. And you could see we're kind of right on the close from yesterday. So the premium closed at $3.20. And then on the put side, I'm going to have it at $3.75, and the premium closed here at $2.95. All right. So these are probably going to open up pretty close to one another, and they're both expiring tomorrow. So I have pretty much 2 days of trading on this. So the theta, which is time decay when it comes to options, it won't be as volatile as trading a 0 DT, right? There are no 0 DTs on Tuesday here. There's only now since January 26th, they have Monday, Wednesday, and Friday. So I could either trade tomorrow's expiration date. I could trade Friday's expiration date. I can go further out. I can go to next week and go to next month. But the further out you go, the less liquidity you have, the less volume you have. So I want to be I want to be as close to the expiration date where the premium price is not so volatile and there's liquidity in there where I can get in and out of my trades and the spreads are tight. I don't want to trade anything that's going to have a 20-cent spread where if all of a sudden I have to get out of a trade, I'm going to be losing 20 cents on a premium because it adds up, right? So, for example, if you have trading a one lot, you're going to lose $20 versus if it's trading at a $5 or $10, 5 cent or a 10-cent spread, you're going to lose 5 or 10 cents, right? So you're going to lose, pretty much 50% more on a 20% on a 20-cent spread, right? So you want to make sure your spreads are tight when you're trading. So that's the important thing. So if you go back and if we look at our 5-minute opening range trade from yesterday, you did get that break. So you got that first break here yesterday. The high was 377.14. The low was 372. So once you got that break, it was a good break on the open. And, 377, you could have gotten $3. Could have gotten yourself about $1.75 maybe on your premium. But, if you stayed in that long trade for most of the day, the market got you up to 84, right? So you got, what'd you break on that? So you got about $7 on your premium. So you could have made about you got $7 on the equity move. So you could have gotten about $4.20 on your premium. So that meant for every one lot that you traded, so if you bought a call for whatever premium price you bought it, that premium price would have gone up about $4.20. So for every one lot you bought, you would have made about $425 if you stayed in that trade all day. That's not my trade strategy. I'm usually in and out of my trades probably within minutes. And if you want to get a good close-up look at that, go down in the description area and hit the link for the Discord and come and join us from 9:30 a.m. to 11 a.m. Eastern time. And we go over this basic 5-minute opening range trade. And I answer any questions you have along with that. If you have any further questions that you have, feel free to drop it down in the comment box down below and I'll answer them whenever I can. Aside from that, if you're new to the channel, again, subscribe to the channel, hit that thumbs up button and like this video. If I don't see you in the Discord room, I'll see everybody tomorrow morning. Have a great day and I'll talk to you soon.